I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned into Traders Nation. Thanks for making us a part of your day. Don and I have got a jam-packed show. David Scranton's with us today, a CEO and founder of Sound Income Strategies, plus book author of Return on Principle. Okay, it's said that the Feds are going to hold rates here, or maybe even go even lower, but they're shocked that inflation is so low. We're going to find out why with David. Plus, Don and I have stocks that are on our list. The payment processes remain there. And so do the towers, all right? There's a reason why. Stay tuned to find out what that is so we can guess stocks and a whole lot more. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
It's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
I'm Steve Forbes. You're watching Traders Nation.
You are watching Traders Nation. Thanks for tuning in. So far, so good. Hey, listen, get a copy of Pro Online Trader DVD over at tradersnation.com today. Click on that More button, and you can get a copy. Learn about shortened stocks, understanding candlesticks, charts, patterns, signals, all that good stuff. Support, resistance, moving averages, fib retracements, and it goes into advance. If you're just learning to trade, man, This DVD was made so you can understand it's done in simple terms and moves on to advance, moves along with you. So get a copy today, $29.95 plus shipping and handling, right over there at tradersnation.com, tradersnation.com, right, Don? So
that's it.
Yeah. Hey, Don, I want to go into PayPal or Square. Let's go to Square or whatever you want to do. Payment processors for sure. All right.
Yeah.
Square. Top of our list here today, currently trading at $72.80, 2.3 million shares exchanging hands here today. Recently dropped below its 200-day moving average. Bring the charts up on this so you can see this drop. Drop below that 200-day moving average. Trying to attack it at this point here today at least. And so let's see what happens. Don, your thoughts on these kind of movements?
Square and a bunch of these payers are just taking off because if you take a look at some of the numbers that these payers are processing, these numbers are actually pretty astounding.
They are.
It really is. And, of course, they're diversifying into other businesses as we go forward. And it's no secret when you go to your local stores, whether you're at the local drugstore or at your food markets, everything is going on plastic and quick payment schemes. So PayPal and Square right in the middle of things. And on a down day, we were down this morning over $200, and here at midday, we're only down about $117. So the payers are actually holding up, and the PayPal and a bunch of these other payers are getting upgrades as well.
Sure, yeah. Square certainly on our list in here. Don, you're right. I mean, this is the Square and PayPal's are the newer technology, the payment process versus the legacy stocks of companies of Visa and MasterCard, right? They're certainly in the forefront of that technology. And moving into other areas, like you indicated, business loans, things of that nature, short-term stuff. So there's a lot of opportunities there. And you're right, man. Everywhere you go, you just flash your phone or flash your thumb or flash your whatever retinas, and you make a payment. And that's the technology today, and the payment future is here today and will be going forward, Don, with some of these PayPal, some of these companies like Square and PayPal. SQ is the ticker symbol here on Square. Sam Quebec is the phonics for that one. Let's move on to PayPal, PYPL, Don, trading at $109.74 here today. $5. Heavy volume here today on a small gap up slightly. If you look at these charts, look at that little gap. Let's bring that chart up for him. Yeah, look at that gap, man. Just a little bit, just a teeny one. But if you look closer, I think the move is over since my technical indicator, the move is starting to come on, and the technical indicators are starting to cross on. So we're getting some crossover on those. So I think we're just starting on this move, unless, of course, something comes out of the blue and blindsides this technical move on the stock today. But again, crossovers happening here today. I'm liking what I'm seeing on my charts. The technicals are coming together for this in a nice small little gap up today. Up $5 since we spoke about it last, Don.
Yeah. Well, small note on PayPal as well. They have a service it's called Venmo, VENMO, and it's a peer-to-peer digital payment service. They have 40 million users on that service, and at least one. And those 40 million users used the service at least once over the past 12 months. So that added up to another substantial revenue factor for them. So PayPal here, as you mentioned, is up pretty good, and it's approaching a 52-week high. And then the big question could be, well, what should I do? Well, some of the analysts on the street think actually it could get better. And one analyst this morning jacked the price up to $118. So as I mentioned at the outset, some of the analysts are on top of these payers. And it's a growing business, and there's a reason why we continue to follow the payers. And Square, although the stock got hit a few months back, is creeping back up. And, of course, we have PayPal sitting in here today, putting on a show for all the investors today. Yeah, that's for sure, Don. And you know what? Listen, and again, these companies are here to stay. This is a growth area. More and more people are paying via their services and their payment processing types and in technology, and it's nothing but a growth area. And that's why some of these analysts are looking at this stuff and saying, hey, these are going to grow, and then certainly some of them are qualified to put targets on them. We're not, but they are, and they have. All right. Now, and then of course, if we take a look at the dinosaurs in the business, MasterCard, Master, and Visa. Take a look at Visa, and then we'll talk about MasterCard. Both of these stocks approaching their 52-week highs. If on MasterCard, it's about 30 cents off its 52-week high on a day where the markets are down over $100 right now. Right, and take that all in consideration. Absolutely. Visa currently trading at $161.04 here today. Same as PayPal, up nicely since we spoke about it last $8. Heavy volume, trading over its 21-day moving average. We got dividend coming up on this one, Don. A little nuance here for Visa. Dividend coming up on May 15th. About a 25-cent per share dividend. Not bad, right? For old Visa, right? That's for staying at the party. Dividend. That's right. Yeah, you want to stay you're going to stay at our party. We're going to pay you 25 cents a share to do it, right? And that's Visa. That's right. Coming up on May 15th. Okay, done. MasterCard. MA is the ticker symbol on that one. Currently trading at $246 here today. Up $13 since we spoke about it last. Nice. Look at the charts on this. Let's bring the charts up for everybody watching. Nice, steady chart climb. Steady and easy, man. This is a classic stair-step climb. Bring your charts up on that. Don, your thoughts? Well, on Visa and MasterCard, look, these are the leaders in the trade. They have actually spawned some of these other companies, and they just continue to put on a show as they approach. And like I mentioned, they're at 52-week highs. Well, what can you say? These are well-run businesses. Let's put it that way. Yeah, they certainly are. And folks, listen, if you're thinking, well, I hate buying at the highs. I'm supposed to buy at the lows and sell at the highs. Well, listen, these continue to make 52-week highs. Will they continue to do that? I don't know. I don't know what's going to come tomorrow. But certainly, how many 52-week highs have these payment processors made so far this year? All right. So the analysts are looking at these. That's why they're putting price targets on these at a much higher level. And certainly, they feel
feel, the analysts of the world feel that these are going to continue to move. And certainly, I can't disagree with them at all, Don. This area, this space is a growing market, without a doubt. All right, towers. Let's move on to towers. AMT, American Tower, currently trading at $192.07 here today. It dropped down recently. If you bring your charts up, it dropped down recently on this dividend that was 90 cents back on April 10th, okay? And it's doing some horizontal work right now, but nonetheless, towers, you can't get away from them at all, Tom, can we?
Well, these are the businesses that transmit the data for the telcos, and as we've been pointing out, and every day now you're reading more and more about 5G. And so these are the companies that are at the forefront here, and although they're being trimmed back today, American Tower is still right up there, not too far off. It's about $6 off its 52-week high, but this is another one. American Tower leads the way around the world, by the way, including India now, which will perk up as we move forward. But the 5G is going to be the place to be for these telcos. 5G, by the way, will be about, I think it's 100 times faster than where we are today, and all those small tower cells will begin to be popping up all over America.
Yeah, all right, nice. That's a lot of speed. And you know what? And that's probably nothing compared to what's going to be in down to 5 years down the road. All right, on the other side, we're going to come back to our towers, but coming up next, we got David Scranton. He's going to be with us. We're going to be talking about the Fed rate. We're going to be talking about a little about inflation, what it means to you. Stay tuned. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again David Scranton. He's CEO and founder of Sound Income Strategies and author of Return on Principles, 7 Core Values to help protect your money in good times and bad, right? David, welcome back to Traders Nation. How are you today?
I'm doing great. How are you?
Doing awesome. Thanks for being here, back with us once again. Hey, it's said that the Fed rates, the Fed may hold these rates, or may even go lower, if you will, but they've also indicated, David, that they're shocked that inflation is so low. Why is that?
Well, I'm really not surprised that inflation is low. In fact, I was on television talking about that when, they actually started raising rates for the first time a few years ago. Yeah. And my comment right after Janet Yellen's announcement was simple. It was, well, if we've held rates this low and we can't stimulate the economy enough to create inflation, then how the heck are we going to raise interest rates and stimulate the economy enough to create inflation? Because here's the bottom line. We have a whole generation right now of people that got skunked twice by the stock market and once by the real estate market since the turn of the century.
Sure.
An aging population, a lot of boomers, who are taking whatever additional money they have, and they're not necessarily spending it and stimulating the economy. Instead, they're taking that money and they're using it to pay down debt, to save and invest, and so on. Yeah. And that's great for their own personal financial stability, but it's not so great if your goal is to stimulate the economy and create inflation.
Sure. That's interesting because I think by what you're saying and what I'm hearing is that maybe this time we actually learned that all that debt is like an anchor to us financially, right? And the sting of the market, which hit us twice, and certainly, like you said, the housing bubble was damaging beyond some people's imaginations. Some markets as low as 50%. I know here in Phoenix it was 50%, in Nevada and 50% down in market. So people never thought this could happen to them when in fact that it did. So, I get what you're saying that, the economy needs to recover, and certainly some would think that. But certainly the people are now paying down their debt. Are they being a little bit more financially responsible for their own household and finances, David?
Well, they are. And, at the end of the day, that's really a good thing. Because, first of all, an aging population tends to spend less. It's just, it's not about stuff anymore that you could acquire. It's about other things. So that's part of it. And then with the experiences they've had, as close to retirement as those negative experiences actually came, they've realized, we need to be careful now. We need to be prudent. So it's a healthy thing. But you see, the real issue is that the Federal Reserve, the government, has been trying to artificially stimulate the economy for a long, long time now.
Right.
It really started in the 70s when we went off the gold standard, but it took a little while. But if you think back even to the 1980s, the first liar loan, the first liar mortgage, if you will, was in the 1980s, when you can literally say, gee, if I put 30% down, I make $17 million a year, and they never checked it.
Right.
If you also remember, that was about the time that we first started taking on automobile leases, where all of a sudden people started to think, well, maybe I don't need to keep my car for 10 years. I get a new one every 3 years.
Sure.
So what it's done is that created an artificial demand for goods and services.
Right.
And then the Federal Reserve, the government, created fancier and fancier ways to stimulate that demand artificially, and the bubble just grew and grew and grew. And now that bubble of economic demand has burst, and it's harder to keep it afloat now, and that's why we're struggling to get GDP just at 2%.
Right. It's interesting because the criteria for all those things you said, for housing certainly, for cars, you literally can go in and drive out with a car, right? Almost at any amount. Right. And the criteria. So when everything hit really hard. All the lending institutions, they tightened up their criteria really bad. Some people with 800 plus credit scores actually lost credit lines that they had. For instance, I had American Express. I had a $50,000 line of credit with them. I had about an $8,000 balance with them at the time. It was business loan. And instantly, they sent me a letter during this crunch, and they said, hey, your limit's now to what you owe us. Right? So that's how they contracted so much. And I was not a risk at all, still not a risk, probably the best money that they'll ever make. But they did that, right? So now we're starting to see some of that criteria loosening up a little bit. Are we going to fall back into those traps when it comes to housing and cars that you're thinking of?
Well, we'll see. I mean, there is some concern about, subprime car loans.
Yeah.
That's, and I don't have the numbers to know whether or not that's a more systemic problem perhaps than the mortgage crisis was back in 2008.
Right.
As far as real estate, though, I don't think we've gotten back there. We haven't gotten back to where we were in 2008. We haven't loosened up to that degree,
right.
Thankfully.
Yeah.
So we might see it in the area of car loans.
Right.
That could be an issue. We know we're going to see some defaults on student loans and things like that.
Yeah.
But again, I don't really see it necessarily with real estate.
Okay.
You see it in other areas.
Yeah. Are the Feds still printing money like they were? I remember back during the housing bubble, man, they were basically printing it until they were going to run out of ink. Are they still printing money like that, or are they contracted in the printing of money?
Well, it's interesting. It just flipped again a few weeks ago because they were actually reversing. I mean, of course, they're always printing money because our debt is growing and running a deficit. But they were reversing that quantitative easing that they had done back in 2008, 2009, and right through 2013. Because they're actually, now instead of buying bonds back, they were selling some of those bonds, reducing the Fed's balance sheet.
Okay.
And that's a contractive policy. But they just came out 3 weeks ago, and the Fed said, we are going to discontinue that practice gradually between now and September.
Yeah.
So that's really another loose money policy. Now that doesn't mean they're going to start QE, but by stopping the reversal of QE, they're going in the same direction.
Yeah, almost.
And again, that's because they see the economic signals, and they're concerned. They don't want to tighten anymore.
Any concerns about the flattening of the yield curve?
Yes. It's been a big concern of mine for a long time.
Yeah.
And I think the biggest thing in that message from the Federal Reserve just a few weeks ago that really shocked me was that, they've been trying to raise short-term rates. And I'm concerned that short-term rates going up is going to flatten the yield curve, right? Well, they stopped that in December because the bond market basically stood up and said, enough is enough.
All right.
So when they came out 3 weeks ago and they tried to lower the long-term end of the yield curve, it's almost like they're creating a flat yield curve. If they can't do it one way, they're going to do it the other way.
All right, we're out of time.
We'll have another Fed-induced recession.
David, we're out of time. Get a copy of David's book today, Amazon. We'll be right back. Welcome back. You are tuned in to Traders Nation. Boy, Don, we came right up against that hard break, right? Head on over to Amazon.com or your local bookstore. The guy in the corner needs your money, too. Support and all that good stuff. Get a copy of Return on Principle, 7 Core Values to help protect your money in good times and bad. Great book, man. Some awesome information inside here. Get a copy today. Hey, Don, I want to get back on the towers we left off at previous 2 segments ago. SBA Communications currently trading at $199.02 here today, Don. 158,000 shares exchange in hands. The stock's up $8 since we spoke about last. Same as the other ones. Had this big down day about a week ago, but it's recovering and resting, Don, right?
Yeah. Well, South American is going to do well for this company. SBAC headquarters down in Boca, but another tower company focusing on the right areas, and of course 5G will explode for them as well.
Yeah.
And earnings are good, so the stock rocketed up to 204, which is an all-time high for the stock, and now it's trimmed back here. And like you mentioned, it's resting here at 199,
right.
198.5. So
that's right.
This is another one of these real estate investment trust companies. You got to keep a good sharp eye on these companies.
Totally.
They're real estate and they pay dividends.
They do. CCI is the other one. We're out of time. We can't talk about that. But hey, Don, do you own any stocks we talked about today?
No, none.
Yeah, I don't either. And by the way, these are not buy or sell recommendations. You need to know that. And always, we appreciate you tuning in and checking out Traders Nation. Tell a friend, all that good stuff. We'll see you on the next edition.